Hi guys, my name is Matheo Dwyer, and today I'll be presenting my Bayesian methods for nonlinear systems using a Kalman filter for pairs trading and using MCMC Gibbs sampler for our return on investment. So sort of what you can see here is something called crude oil, and then here we can see heating oil. And what these are they're called futures, specifically commodities. In a simple sense, you can think of them as like two stocks, but instead of companies, they're like supplies. And it can be hard to use Bayesian methods to predict things that are nonlinear, like stocks. But it can be easier if you have a steady relationship that is always mean reverting. So, for example, heating oil always depends on crude oil in terms of pricing. So yeah, I'll be kind of talking about how we can implement Bayesian methods for trading today. So here we have the outline of what I'll be talking about. To the right, you can actually see the differences in prices between crude and heating oil. And then kind of the line in the middle, which is going to be the difference of the two prices, is called the spread. So I'll be talking about that a lot. To the right up here, we can see that graph spread. We can see exactly how it looks compared to the one on the left. It's kind of like an average, if you will. And yeah. So moving on, I'll be explaining the Kalman filter that I'm using, specifically the trading signals. So we're going to use this Bayesian approach to map the different decision-making techniques that we'll be using. And then I'll also be explaining the algorithm in itself. I'll be using Overleaf to show the LaTeX code for the math behind it. I'll be using Python to show you guys the implementation code. And then I'll be showing you guys my results, which are actually pretty cool. You can see how well the Kalman filter here did to track the observed spread. Here you go. Did a pretty good job. And then we can actually, I'll be looking into all the trades it made with profit and kind of like a $1,000 simulated bank account balance. But yeah, we'll be using MCMC Gibbs sampler to assess kind of the success of our trading strategy, how good it is, and I'll be using RStudio for that kind of stuff. I'll also be doing a little conclusion and discussion. But yeah, if you would like to see how Bayesian methods can be used in the stock market application, I would love to show you guys a bit on that. So yeah, thanks for the time. Have a great day.